So what are you seeing in the oil industry? Could we finally say that the supply glut has peaked?
Morning, Sherry. Well, I'm not sure about that, but certainly this is a very strong rally. We're now into the sixth straight day of gains, and this is actually the longest rally we've seen in a year. So clearly, market dynamics have changed. What I would say is this is probably driven more by the production cuts we've seen kick in rather than any pickup in demand. Obviously, you had the OPEC plus 9.7 million barrels a day being taken out from May 1. And also, U.S. shale producers are drastically cutting back their activity. We had another couple, Diamondback Energy and Parsley Energy, both in the last 48 hours announcing production cutbacks. So that's what's driving this strong rally back above $25 a barrel now. But I think for it to be sustained, we're probably going to need to see more of a recovery on the demand side.
And do we have expectations that that will ramp up? Obviously, China is back up and running. We're hearing increased expectation that the US and other economies will start to open their economies back up as well. But it does look like a pretty slow slog in terms of that translating to demand increase.
Yeah, well, that's right, Heidi. I mean, it's anyone's guess, really, when we see this a strong demand pickup. There are a few chinks of light, as you mentioned. China starting to get back to normal. South Korea also, the economy there is on the recovery trail. And we had some early signs out of the US last week that the demand might at least be bottoming out and might be starting to recover from here. But I think you really need to see those lockdowns across the states and northern Europe ease in a more significant fashion than what we've seen so far before that demand really does start to pick up. And until then, I'd be a bit cautious. I'm saying that this rally is, we've seen the bottom in the market. Clearly we're in a better state than we were a week or 2 weeks ago. But that's not to say that we could and probably will get setbacks from where we are right now.
And we're also starting to see the stockpile buildup that we were seeing in Cushing, Oklahoma, start to slow down. What are we seeing in terms of energy companies here in the U.S. starting to cut production as well?
Yeah, well, it's interesting that the structure known in the market as the contango, which is basically the difference in price between the front month contract and the following month, that's now tied to its narrowest in more than a month. And that's really the strongest indication you can get that the market is less concerned about storage levels. Because we saw when prices slumped into negative last month, that was when the expiring contract, people were left holding that and had no place to store it. So the fact that contango has tightened is a sign that people are perhaps less worried about those storage levels. And as you mentioned, the Cushing Oklahoma stockpiles have shown signs of stabilizing, and perhaps we won't be in that situation in this coming month where people are left holding physical barrels of oil and nowhere to store them. I wouldn't say we're out of the woods totally yet, but certainly with the production cuts as well, the market seems to be in a slightly more stable place than it was